Hello everyone and welcome back to my channel Lessons at Fingertips. Here we are going to discuss on some important topics in very simple words so that it's easier for you all to understand and keep things in mind. So today our topic of discussion is going to be financial markets. I guess you guys are all well aware with this term financial market. What is this financial market? Financial market implies what? Implies any broad marketplace. Okay, it's a any broad marketplace, or you can say broadly what is financial market. Broadly you can say that it's a marketplace where trading of securities occur. Yes, financial market can be broadly said as a marketplace where trading of securities takes place, okay, including the stock market, bond market, forex market and derivatives market, among all others. So there are other types of financial markets too, but including that, these are certain other financial markets. What are they? They includes the stock market, the bond market or the debt market, isn't it? Then the forex market, the derivatives market. As so these are certain kinds of financial markets. Okay, next, what are they useful? Why are they essential? Financial markets are essential. Why? For the smooth and easy functioning of the capitalist economy. Yes, for the smooth and easy functioning of the capitalist economy, financial market is required. Why? Because for the smooth functioning of capitalist economy, there should be the presence of investors. Why? Because someone who are investors, someone who are having more money, right, in their hand. So those investors are going to invest on particular business or on someone who can make full utilization of the money, isn't it, or full utilization of the resources. Financial market is a marketplace where someone who is having more resources or excess resources are going to invest, are going to give it to someone who can make full utilization of the resources. That is the borrower who is going to make utilization of resources. Unless and until the resources, the limited resources are not utilized properly, economy cannot be growing, isn't it? And for the growth of economy, it's very essential for the resources to be utilized properly. So sometimes it happens that some of the people are having excess of resources, but they cannot actually utilize it. So what are they going to do? They are going to go to the financial market. So in those markets there will be buyers as well as sellers, isn't it? So they will be selling it to the buyers who can actually make full utilization of the limited resources. So that is what you call financial market. Now financial market can be either bond market, stock market, forex market or derivative market, or there are certain other types of financial market. We will be discussing the types of financial market in the next slide. Okay, now let us concentrate here. In these kinds of market, funds are transferred from people who have an excess of available funds. Who have excess of available funds? The investors have excess of available funds. To people who have shortage, that is the borrowers. Financial market like that of bonds and stock market. What does they do? They channelizes the funds. The funds from people who do not have any productive use for them to people who actually needs them. So they will be channelizing the funds. They act as a channel of the funds from people who have excess of the fund and who do not actually need them, who cannot utilize them, to people who have lack of funds but they have the ability to utilize those funds. So these kind of market, the bonds and the stock market acts as such kind of channel. So that is, you can say, these are the work of the financial market. Well functioning financial market results in what? In high economic growth. Why? Because the limited resources are being properly utilized and also have direct effect on the personal wealth. Okay, because the borrowers, they won't be borrowing just for going in loss, isn't it? They are borrowing. Why? So that they can utilize it and make profit from that. So the borrowers will be benefited, the person from whom they are borrowing, the investors needs to be benefited. So everyone, the personal growth in income is taking place. So they have direct effect on the personal wealth, the behavior of business and consumers, and also on the performance of the economy. It also, financial market, a good financial market also have what? A behavior on the business and consumer, availability of funds at proper rate of interest, utilization of that funds can bring the businessman, can encourage the businessman as well as the consumers, because personal wealth is also increasing, so consumers will also be benefited. And these are certain, this from here you can easily understand what are the result of good functioning financial market. It results in high economic growth as well as have a direct effect on the personal wealth as well as on the behavior of the business and consumer, and also on the performance of the economy. Good proper economic growth will result in better performance of the economy, better funding, better investment will lead to better industrialization, will lead to the economic growth. Next, its financial market rely heavily on what? On the informational transparency to ensure that the market set prices are efficient and appropriate. Whenever the investors are investing, they will be charging for that. Maybe they will be charging the rate of interest on the funds they are investing. So how much are they going to charge? Proper informational transparency should be present in the financial market. While you are purchasing the stock, the bonds, the shares or any kind of things, proper informative transparency should be present. Why? Because the person who is buying should be knowing what are they buying, at what price they are buying, is it even efficient, is it even good, is it even necessary to pay that kind of price for this much of funds or something. So information transparency is necessary in case of financial market. Next we will move on to the functions of financial market. We have already discussed here, but let us go in some more detail. The first one is it facilitates what? Mobilization of savings and puts it to the most productive use. Someone who is having excess fund, how are they having excess fund? They might have done the savings. So mobilization of savings, maybe they have done the savings, they are having excess fund, but they cannot make proper utilization of the resource. So this financial market will act as a channel where the funds will be transferred from one who is having excess of it to one who is having lack of it but can utilize it properly. So for productive use, financial market acts as a very good and efficient market, okay, where the excess funds can be used for the productive purposes. Second one is determining price of the security. What happens is that whenever you are in a financial market, there only all the buyers and sellers are going to accumulate, they are going to sell their funds or borrow funds from that particular market. So there you cannot charge any unusual price for your market, or you cannot give ask for return, some unusual return from the funds that you have invested, isn't it? So it helps in determining the price of the securities. As like you go to the marketplace, you cannot all of a sudden charge some 50 rupees for a particular vegetable which everyone is charging 20 rupees, isn't it? So similar things happens here. Now the third one is provides liquidity to tradable asset by facilitating exchange. as investors can sell their securities and convert the assets into cash. Now, sometimes the investor might not have liquid cash. So, in the financial market, they have the facility to transform their assets, to transform their non-cash assets into liquid cash. Also, they have the financial market will provide liquidity to tradable assets which are tradable but are not in form of cash, liquidity to make the assets liquid, and facilitate exchange as investors can sell their securities and convert assets into cash. Sometimes they also purchase securities. You know, in the financial markets, they people also can go and buy securities. Okay, it's like kind of in written paper form. So that kind of securities also they can buy. The securities have some value, so they can even sell those securities and transform that into cash. And the fourth and very important one is it saves the time, it saves the money, time and efforts of the party, as they do not have to waste resources to find probable buyers or sellers for their securities. Now, when you need a vegetable or something, you don't go to just your neighboring road and start finding out for that. No, you don't do. What you do, you go to the marketplace. There you can get varieties of things that you need. So similar things happens here. Even if you want to sell vegetables, you won't be sitting just beside a roadside. You will be going to the marketplace, because there the consumers will be coming, there the buyers will be coming. So same thing happens here. It saves the time, money and efforts of the party. Maybe it's buyer or the seller, okay, maybe it's the investor or the borrower, and they do not have to waste resources to find probable buyer or probable seller for their securities. So I hope you guys have understood this. Now let us move on to the types of financial markets. Types of the financial market. So first we are going to read the basis of the difference, and then the basis of the types, and then some of the types. So first, basis of type is by the nature of claim. Yes, by the nature of claim, we have two different types of financial market. One is the debt market, one is the equity market. What is a debt market? It is a fixed claim. Debt market are kind of markets where fixed claims such as bonds and debentures are brought or sold. So a debt market is a market where fixed claims such as bonds or debentures are bought and sold. What are equity market? Equity market are those market wherein investors deals with equity instruments, market for residual claims, not fixed claims but residual claims. Equity market are markets where we deal with residual claims. For example, the stocks. What are stocks? Stocks are the securities that claim on earnings and asset of a corporation. So those are deals with what? Residual claims. The debt market deals with what? Fixed claims. If you want, I can make a detailed explanation on debt market and equity market. But for now, let us remember only this. And next, the second point is by the maturity of claim. Yes, by the maturity of the claim, we again have two types of market. One is the money market, another is the capital market. What is money market? Deals with the short-term funds. The money market deals with the short-term funds, for example, like certificate of deposits or treasury bills which mature within a year, not a medium term or a long term fund, but matures within a year. The treasury bills or the certificate of deposits. Now, these kind of markets do not actually exist physically but are virtually present. It's done over phone basically. Next, the second point is the capital market, wherein medium or long term funds or assets are traded. Okay, now there can be of two types. One is the primary market and the secondary market. What are the primary market? Here, the company listed on an exchange for the first time issues new security, or an already existing company brings fresh issues. Try and understand this. What are primary markets who are newly listed? Either the markets are newly listed, are issuing new securities, or the already listed companies are issuing new securities. That is the primary market. What is the secondary market? The already existing companies are dealing with the already traded securities, are trading the already issued securities. Yes, they are dealing with the already issued securities. They are not issuing new securities. So that is the case of secondary market. The investors such as merchant, bankers, stockbroker, mutual funds are present in the secondary market. Now the third one is by the timing of delivery. We have two types of market. One is the cash market and another is the future market. What is cash market? Real time transaction takes place. Buying and selling took place. Payment done real time. It's happening in real settlement in real time. But in future markets, the settlement are not done in real time but are listed for future, for a specific time in the future. It's termed. So that kind of the delivery or the settlement for commodities takes place at a future specified date. Now let's move on to the fourth point. The basis of this type of financial market is on the basis of organizational structure. We have two things. On the basis of organizational structure, it can be either organized or the decentralized. It means either centralized or decentralized. So one is the centralized organization. What is it? Exchange traded market. It is a financial market which have a centralized organization with the standard procedure. One is having a standard procedure, another is having a custom procedure. So standard procedure and centralized organization is the exchange traded market. Another is the over the counter market, that is having a decentralized organization. It is having a decentralized organization and a custom procedure. Do you understand? I hope you guys have understood till here, isn't it? So we have on the basis of organizational structure, we are dividing the financial market into two types. One is the one who is having a centralized organization and a standard procedure, that is the exchange traded market. Another one is a decentralized organization with a custom procedure, that is the over the counter market. Now we have seen that since last few years the importance of financial markets have increased a lot. Why? Because of low transaction costs. Number 2, investors protection. Number 3, high liquidity assets. Number 4, informative transparencies, etc. There are other different reasons too, but these are one of the 4 important reasons for which since last few years the importance of financial markets have increased a lot. So I hope you guys have liked this video, have got information regarding the financial markets. It's time to hit a like and subscribe to my channel. Do share it with your friends and do watch my videos for other information topics. Thank you. Bye bye.